Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me, Shrishti Sharma. Well, Shrishti, let's just look at the markets. We did see some weakness coming in the morning, slight bit of recovery coming in, but I would say overall a somber market, especially the PSU pack, the PSU banking names, which is really taking it on the chin on the back of the RBI, the draft consultation paper that's come out.
Well, yes, Ankita, we did start on a positive note thanks to the positive global cues, but we could not sustain that positive momentum thanks to maybe the FII selling that we are seeing day by day happening, and today we will watch out for that data as well. But for now, the markets are at the day's lowest point. Nifty Bank down about 52 points as of now, and Nifty 50 is also in red, down about 39 points. On the losing side, have a look at Titan. That stock is now down about 7% after the earnings. All these PSU counters are one by one seen to be having some bit of a profit booking rather. Stocks like Coal India, BPCL, SBI, NTPC, they are all down more than 2.5% as of now. On the flip side, after a very strong management commentary and the double-digit volume growth guidance, Britannia is up around 7.5%. Kotak Mahindra Bank after the earnings is almost at the day's highest point, up by around 5%. And other than that, all these IT majors like TCS, Infosys, HCL Tech, LTI Mindtree, they are also supporting the index as of now. But the broader markets are not that supportive and cheerful in today's trading session. But yes, Ankita, like you were mentioning, we could not take our eyes off on the power financiers on the back of the RBI draft that has come in, and that's expected to impact stocks like PFC, RSC, as well as some of the PSU banking names as well, Ankita.
Absolutely, Shrishti. But the stocks that are also in focus, like I mentioned, the PSU, PSU pack, especially the PSU banking names. In fact, it's trading with cuts of 4% right now on the back of the RBI consultation paper. And just for that, my colleague Somit Sarkar is joining with an exclusive, REC sources, ally concerns on the RBI draft norms. And to tell you more on that, my colleague Somit is joining in, with what they're saying.
Well, if you see, we had seen a sharp fall in the share prices of REC and PFC post RBI came out with the guidelines for higher provisioning for projects which are under construction. But now what we are hearing from our sources in the company is that these guidelines are still in draft phase and will be implemented only post there has been a consultation with stakeholders. But what is the more important part, that is what we are understanding from our sources, is that even if these new guidelines as it is, if they get implemented, it will not impact the profitability of the company, and that is what we are understanding from our sources. And also what we understand is that REC will not be required to do any more additional provisioning even if these guidelines get implemented. So even if these guidelines get impacted, there won't be any impact on profitability, no impact on ROE, that is return on equity, and also the company might not have to make any more provisions post implementation of these new norms, which means that their growth also, which was one of the factors that Street was understanding that the growth might get impacted, will actually not get impacted because there won't be any additional provisioning required by REC to do post the implementation of these new norms. And hence we are also seeing some kind of a recovery when it comes to REC and PFC in trade currently, and this is what we are understanding from our sources in the company.
All right, even though all the fears have been put to rest, but we do see REC and PFC both trading with cuts of over 8% in trade. But tell you what, let's start with all the stocks that are buzzing away in trade on the back of research and technicals. And on the technical side, we are joined by Aditya Agarwala, Head of Research and Investments, Invest for Edu. Hi, Aditya. And we also joined by Ansh from the research side. Hi, gentlemen. Welcome to Eat Now Fatafat. And we'll get started with all the stocks that are buzzing away in trade. The first stock is Kotak Mahindra Bank. Of course, it's stellar earnings coming in there for the bank, trading with gains of 5% right now. The share was up and away in trade since early morning, after it reported better than expected Q4 results. Let's look at the results then. The NII, the NII has come in at 13%, gains of 13% on a year-on-year basis. The profit after tax has also seen an uptick of 18%, and the operating profits has also seen an uptick of almost 18% on a year-on-year basis. Also, JP Morgan has upgraded Kotak Mahindra Bank to overweight following supportive valuations post the recent RBI actions and senior management departure. Phillip Capital is also maintaining a buy rating with. But they have cut the target price though, and they've cut the target price to 1,900 rupees. And MK has retained a reduced and cut the target price to 1,600 a piece. And that's the word coming in from brokerages. And also, we did see the management also say that the first priority is to get the Kotak back to the business as usual. And two things not going to change are the healthy return with risk-calibrated approach and keeping customers at the center and align business model around the customers is what's going to drive the growth for the bank. That's the word coming in from the management. But we also spoke to the management on our channel, and we'll go across to the management and see what they had to say.
The Reserve Bank of India order obviously has had an impact on both our franchise, our reputation, which, obviously doesn't feel good. And like I said, totally and utterly committed to coming back. That's our number one priority. There will be a period when we won't be able to issue credit cards and we won't be able to do customer onboarding using online and mobile channels. Obviously, the credit card business will be affected, and I think the other business that will get affected is our 811, which is a very, very important business for us. We want to utilize this period to actually focus on our existing customers and enrich the experience and hopefully deepen the relationship with the customers. And if we are able to do that, and if we are able to fix the technology and get it to the expectations of the RBI, I think we'll come out stronger on both fronts. If we are able to do all of this, frankly, I'm more worried about the reputational impact than I am about the financial impact.
The experience of past 2 weeks, have you seen any kind of trend as far as branches is concerned? Is there customers which you would onboard digitally are not there? Because you mentioned last time in the investor presentation, it was 90% of the customers were there through digital channels. So what has been the experience so far, and what are the steps you have already taken?
We said 98% of customer transactions from savings customers goes through digitally. There is no impact whatsoever of our existing customers doing transactions through any channel, physical, mobile, net, or any restrictions on us cross-selling product through digital channels.
Well, moving on, and let's shift focus to some of the oil explorer companies. Today, on the back of a brokerage note by Anti, two of the companies are in focus. Firstly is ONGC, where they maintained their buy rating on this counter and hiked the target price to 339 rupees from 292 rupees earlier. And as well as on Oil India, they do maintain their buy rating, and there they have hiked the target price to 709 rupees from 591 earlier. What they are saying is that the premium gas prices are coming soon, as well as significant re-rating trigger. That's 20% premium on the new APM production to be notified. Now, oil prices are expected to remain elevated, and both ONGC and Oil India are likely to witness production growth. So that's the bullish commentary coming in from Antique on both of these oil explorers. But for today, the stock of ONGC is down about 2% after the kind of sell-off that we are seeing on all these PSU counters. But apart from that, Oil India is holding on to itself, but flattish as of now.
All right, coming to you, Aditya, you picked out Alkem Labs for us. Tell us, in the last 6 months, it has given us good gains of almost 33%, and we are seeing an up move coming in Alkem Labs. What is the upside to this?
Hi Srishti, hi Ankita, thanks for coming to the show. It's a beautiful breakout in trade today, and the way markets have been choppy, this is one stock which is clearly bucked the trend and making higher highs, higher lows as we speak, almost trading at the high point of the day. Stock has broken out from a falling wedge pattern on good volumes, so that is a confirmation that the breakout is likely to continue. The uptrend post the breakout is likely to continue, and if it sustains above 5090, 5100, I guess stock has legs to test levels of 5500 as well on the upside, with a downside support at 5000. I think it's an excellent opportunity to go fresh long in the stock even at current levels. If you missed out an opportunity in the morning with a stop loss just below 5000, look for a target of 5500. More of a positional trade, Ankita. And plus, if I club the moving averages and the RSI, MACD, all are pointing towards a bullish follow through in the stock. So overall, looks extremely healthy. Chart setup is bullish. I would suggest a buy at current levels for a target of 5500.
All right, then that's on Alkem Labs. But let's talk about a stock which is flying high in today's trading session. And Ansh, that's Anup Engineering, up around 13% as of now. Take us to the earnings fine print.
That's right, and actually the stock was up 18% in morning, but due to market pressure, yes, it is trading with 13% of gains. The stock has a reported revenue of 157 crore as compared to 144 crore, which is up by 9% on year-on-year basis. Whereas if we talk about PAT, that has jumped by 120% from 19.5 crore directly to 43 crore. If we talk about EBITDA here, so we are seeing an uptick of 23% from 30 crore to 37 crore, whereas margin has improved from 21% to 23.8%. The board has also recommended final dividend of 15 rupees per share and one-time special dividend of 5 rupees per share. Also, if you see the chart, the stock seems to have given a good breakout from that 8-session consolidation pattern, touching record high level. And if we see on year-to-date basis, the stock is up over 50% this year.
Well, coming to you then, Aditya, United Spirits is what you have picked out for us, and the stock has already touched its 52-week high, is what we can see. Tell us, will this stock get the investors high, or will it make them sober?
I think it's going to test new highs, Ankita. It is already trading at life high, I guess, and it's going to continue its up move. It has broken out from a rising channel, and the channel was present from July 2023 onwards. So you can clearly figure out the kind of consolidation that the stock was going through, and now it's finally broken out for that hurdle of 1200. So 1200, 1210 was a major resistance for the stock. It wasn't able to take that out. Now that it has taken out on good volumes, I think the stock has more upside left. Even at current levels, I would be a buyer in the stock. Look for a target of at least 1300 on the upside, if not more. And on the downside, the resistance, which was 1200 earlier, will act as a support. So just a 40-point downside from current levels, and you can see at least 1300 on the upside. And once 1300 is also taken out, I think 1375 is something that I'm eyeing on. And plus, RSI has entered into bull territory. So on all parameters, looks like stock is getting higher. And on the upside, 1375 are my two targets that I'll play out for the stock.
All right, Aditya, so more upside, and this will definitely get all the investors high. But moving on to another counter that's soaring away in trade, and that's Godrej Properties. In fact, it was up almost 12% in the trading session. It is now trading with gains of almost 10% now. Strong set of quarter 4 results coming in for the company. FY24 highlights today that they've clocked in the highest ever annual sales by by a listed company, and also they have recorded some best ever quarterly and annual sales, and also best quarterly and annual net profit for the company, and the 5-year growth CAGR of 33.5%. Now, the company's robust quarter 4 results and strong sales trend have been buoyed by demand. JP Morgan has also upgraded the stock to overweight and raised target price to 3,100 rupees, and noting that the company's FY24 pre-sales has been good, and the sales growth in Mumbai is an added positive as the company is finally capitalizing on home market opportunity. That's the word coming in from JP Morgan. Nuvama is also maintaining a hold on the company, raising the target price of the stock to 2,828 rupees, and Jefferies also maintaining a buy call, and the target price is 3,175 rupees. So bullish notes coming in from brokerages, and the stock is soaring away in trade, up 10%.
Yes, great gains on Godrej Properties, flying high in today's trading session. But let's shift focus to before we talk about another stock, let's hear out from the management itself. Feroz Shah Godrej, Executive Chairman of Godrej Properties, share their growth outlook going forward. Let's go across and listen into him.
The portfolio for new launches that Godrej Properties has is actually quite a bit stronger in FY25 than it was in FY24. So we certainly hope to be able to build on the strong operating momentum we saw last year. I think a few things are helping drive the confidence. One is, of course, in FY24 itself, we did about 22,500 odd crore of sales. So this is about 20% growth on that, which is our long-term aspirational growth rate that we'd like to maintain. So I think we've demonstrated success at a very rapid scale up in sales over this past year. We had guided publicly on a long-term basis that we'd like to operate the business with a gearing anywhere between 0.5:1 to 1:1. Anything under 0.5:1, frankly, we think would not be adequately taking advantage of the kind of growth opportunities present in the Indian real estate sector today.
All right, coming to you, Ansh, then. Stock in focus is CDSL. It has reported its Q4 numbers. Take us through what the numbers are looking like.
Yes, so starting with the stock first, stock is up around 3.5% in trade today. They have reported the Q4 and revenue of 241 crore, which is up from 125 crore. So we are seeing an uptick of 93%. Whereas if you talk about profit, then here we are seeing a jump of 105% from 63 crore directly to 129 crore. EBITDA also seeing an uptick of 111% from 70 crore to 148 crore, whereas margin has improved from 55.6% to 61.4% on year-on-year basis. Also, if we see the chart, the stock seems to have given a good breakout from its short-term downward sloping trend line, and it has touched record high level as well. Also, the breakout was backed with volume of almost 2 times its 10-session average volume. So for those reasons, the stock is in focus.
All right, that's about CDSL, up around 3.5% in today's trading session. But Aditya, let's talk about Supreme Industries. That's the stock that you are tracking. Take us through how the technical looking like for this one.
Oh, it's extremely healthy and a fresh breakout, Srishti, from a consolidation. Stock had entered into a long consolidation phase, a sideways consolidation. And after a big up move, it's very obvious that stocks do get into a consolidation phase. Now it's broken out on very good volumes and looks like stock is headed much higher. Even at current levels, if one is to take a long position with a stop close to about 4,800, I'm looking at a target of 5,700 and 6,100, 2 targets, and those are all medium to longer term targets. It's more of a positional trade, Srishti, that I think one should take in the stock because it's a big breakout and one should ride the entire rally that is going to play out. Plus, last 2 trading sessions, volume are suggesting that the up move is likely to continue here. And then plus RSI and MACD also are confirming the bullishness. So overall, it's a very healthy looking chart setup, and one should definitely keep an eye on Supreme Industries for a target of at least 5,700 to about 6,100 on the upside.
All right, do look out for Supreme Industries, looking quite good on the technical front. But let's talk about another stock, that is Deepak Nitrite, holding on to the gains of almost 4% in today's trading session. And the sharp spike that we have seen in the morning session itself was on the back of a Morgan Stanley note where they've gone ahead and upgraded the rating on this particular counter. Rating upgraded to overweight from an underweight rating earlier, and have also hiked the target price to 2,985 rupees versus 1,625 rupees earlier. So they're still looking out for another 300 to 400 rupees run up on Deepak Nitrite. But what they are highlighting on the commentary side, they're saying that the new and the largest yet investment cycle could drive the next leg of re-rating. Coinciding with this capex cycle is a bottoming out of the base business, operational as well as volume enhancements, and a strong balance sheet could have a multi-year investment cycle of $1+ billion. This could potentially double the earnings by 2028, and there are 3 cases of 2x plus re-rating in the last decade in anticipation of earning upgrades. Now, some of the other triggers that they are highlighting is that the base earning improvement, project startups and new investments, they could be the re-rating candidates for Deepak Nitrite. And since the start of the day itself, we are seeing the stock holding on to the gains of almost 4% right now.
All right, Aditya, coming to you, Aurobindo Pharma is the name that you've picked out for us. Last 6 months given good returns, almost 35% returns, and also today in today's trading session it's trading with gains of 1%. Of course, that's on the back of the completion of the US FDA audit. But what are you penciling in on the charts for this counter?
Oh, I think one should definitely look at it. It's gearing up for a move. It's not yet moved in trade today. As such, it went into a consolidation after a sharp up move. Last couple of months have been more of a sideways consolidation if you take a look at the chart setup. And now it's broken out from that consolidation. Before it starts to move higher, one should definitely latch onto the stock at current levels. The risk to reward is in favor of going long with a good support on the downside at 1140, Ankita. I think stock is poised to test levels of 1350 at least on the upside. And once 1350 is taken out, it can test 1450 as well. RSI has moved into the bull territory, and moving averages are also inching higher. Stock has constantly taken support at the shorter term moving averages, so which is a clear sign of strength and bullishness. So one should look at Aurobindo Pharma at current levels with a stop at 1140 and a first target of 1350 on the upside.
All right, that's about Aurobindo Pharma, but let's talk about Tata Technologies as well. Ansh, one of the result candidates, take us through how are the earnings and what are the brokerages seeing?
Right, so the company has reported revenue of almost 1,300 crore, which is up slightly by 1% from 1,289 crore. Whereas if we talk about PAT, let's talk about actually EBITDA margin. Here we are saying it was almost flat, almost 18.4% as compared to 18.3%, which is up by just 10 basis point. If we talk about EBITDA, that also was up slightly by around 1.4% from 236 crore to 240 crore. But PAT, it was down by 7.6% from 170 crore directly to 157 crore. Well, actually that explains why the stock is trading in red by 3.5%. We have a brokerage note as well, and JP Morgan has maintained underweight rating with a target price of 800 rupees. That's 23% below the current market price. They've also said that the margins were in line with the expectations and VinFast will bottom out in Q1.
All right. Aditya, we'll come to you. Gujarat Gas, tell us what are you seeing on the charts for this one?
So Ankita, again, a clear breakout, and look at the volumes in trade today on the breakout. So last couple of weeks, stock had entered into a consolidation and the volumes had completely dried up. And now in trade today, it's broken out from that sideways consolidation on very good volume. So that's a confirmation of a resumption of the uptrend. Plus, it's also broken out from a downward sloping trend line and had taken support at the 100 DMA. So overall, everything is going good for the stock as far as if you're a bull. And on the upside, I believe stock can easily test levels of 590 to 610 with a good support on the downside at 540 and 530. So these are two good important support levels. And plus, as I look at RSI very closely, that has also given a positive breakout. So overall looks very healthy, and put a stop maybe between 540, 530 and look for a target of at least 590 to 600 on the upside.
All right, moving on to another stock that is buzzing away in trade is Avenue Supermarts, an earnings candidate. And if you look at the earnings, overall inline set of numbers coming in for this counter. Look at the numbers then on a standalone basis. The revenue has seen an uptick of 19% on a year-on-year basis. The EBITDA has also seen an uptick of 20%, and the margins have remained largely flat at 7.59% versus 7.57%, and the profit has seen an uptick of 19.5% on a year-on-year basis. Also, the management, Neville Nohara, who's the CEO and managing director, also came out and said that they continued to see the uptick in the contribution from general merchandise and apparel in Q4, and the gross margin improvement has been reflective of this mix improvement. Also, we had JP Morgan come out with a note on Avenue Supermarts, and they have upgraded to overweight from underweight, and they've hiked the target price to 5,400 rupees from 3,555 rupees. They feel that the moats are strong, they're absolutely intact. Robust revenue growth has been auguring well for the company. A gradual margin expansion, they see a gradual margin expansion ahead. Valuations, though premium, are below historical average and will be supported by longevity of healthy growth, and that's the word coming in from JP Morgan. On the back of that, this stock is in focus today.
All right, that's about Avenue Supermarts. But let's talk about V-Guard then. The stock is holding on to a decent gain of 1.5%, Aditya. But if I look at the long-term chart in the past 1 month, the stock has done absolutely nothing. But after moving out of this consolidation, do you believe that the stock is ready for a good breakout?
Oh, absolutely, Srishti. In fact, apart from that 1 or 2 days of correction in the month of March, stock overall has been doing well for itself, making higher highs, higher lows. And now it's given a fresh breakout from an ascending triangle pattern neckline. And a sustained trade above maybe levels of 350, which is doing so right now. I believe stock can easily test levels of 375 to 410 on the upside. On the downside, now 340 is an immediate support level, which was the neckline of the ascending triangle pattern. So overall, it looks very healthy, and plus the breakout is backed by healthy volumes as well. So looks like the breakout is on here to stay, and should see higher levels going ahead. At least 375 is what I'm eyeing on, and after that is taken out, 410 also should be seen on the card. So 340 should be a stop, 375, 410 should be your targets.
Okay, 375 and 410 are the targets coming in for V-Guard, obviously with the stop loss there. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back.
If If you like this video, then like, share and subscribe to ET Now.